Hey everyone, Kyla. Welcome to my weekly market update, where we talk about the stock market and other things.
My mind is a barrel, loaded clips and my guns tucked. Literally stupid up in the booth.
So what happened in the stock market this week? The bigger question is what didn't happen. There was a lot going on. There was a lot of economic data, a lot of earnings, and my laptop died. Most importantly, my laptop died. Ever tried to work without a laptop? Have you ever realized that you were entirely reliant on hardware? I did. Market was a little bit tired today on Friday. Month-end repositioning contributing to some of that weakness. It is the end of the month. Happy May. Wow. The Nasdaq gained 5.4% this month. The S&P gained 5.2%, and the Dow, always the laggard, gained 2.7%, which is weird because that's almost like an annual performance. So annualized, that would be 20%. In terms of policy this week, really big week for economic data. Powell spoke, we had some big numbers hit, and all the big boys had earnings. Powell reiterated that inflation is pretty much transitory. There's bottlenecks and its base effects. Things are transitory because of the base effects, so it doesn't make sense to compare to last year. So all of the bottlenecks that are in the supply chains and all of the commodity movements, all of that's only temporary. I'm a little bit worried that some of the supply chain bottlenecks are more structural. Like, I've done a lot of research for my TikToks, and I think that they could be temporary. But if it's from decades of underinvestment, entirely different story and a little bit concerning. Powell was also asked about Dogecoin and all of the other market froth. I wrote about it in my meme piece if you wanna check it out. Powell has noted that things have gotten frothy in the market, saying that vaccines and fiscal policy play a big role in that, and monetary policy does a little bit too. Self-awareness is the first step. The Fed held rates near zero as expected. Employment still needs to fully recover, and it's down well below its pre-pandemic peak. Biden also released his $4.1 trillion plan, a lot of allocation to tax credits, amongst other things. So in what gets approved versus not. Takeaway from policy decisions this week was that fiscal policy is full steam ahead, and the Fed is not gonna change path. Like your one friend at a party, we all have this friend, where you're like, hey, maybe you shouldn't. And then they're like, I'm going to. Fed won't budge. Like their bond repurchases of 120 billion, they're gonna continue to keep rates low. Don't fight the Fed. If we can just think of one thing, don't fight the Fed. Don't fight the Fed. It's gonna let us know when it's time to think about, time to thinking about, time to think about, time to think about, and time to think about raising rates. Some big brain pal stuff. It's a big numbers week. Personal savings are back up to 6 trillion. A lot of cash waiting to find a home. Probably a literal home. Yikes. Personal savings rate is now at 27.6% as a percentage of disposable income from 13.9% in February. People are saving their dollars. But it's an interesting parallel to increasing worries of labor shortage. And there's a lot of jobs open at like restaurants and other service industries that are not being filled. Also, like, there's a whole Pokemon card thing going on, which is really interesting. Supply and demand is just, that's like all that matters. Supply and demand. There's not enough employees, wage inflation because of that. And Pokemon cards, like, they literally can't hire enough people to grade these cards. GDP rose by 6.4% this quarter, above an estimated 6.1%. The economy is growing primarily from goods consumption. As we continue to reopen, people will have plenty of opportunities to spend their money. Nice. Housing market, a lot of people are demanding homes. I think this was an interesting data point. People are actually headed back to the cities. You can see an uptick in the REIT, Class A coastal apartments. People are starting to return to the coast slowly but surely. People still want homes. We have variables of the millennials and then also the pandemic where it's like, I don't want to live in a small apartment. price of lumber doesn't help that much. I have a separate piece on that. People are starting to take out loans against their homes, and homes are selling at all-time high prices. Just so much demand, flying off the shelves. Big tech earnings week. So we had Apple, we had Amazon, we had Facebook, we had Google, and we had Tesla and Twitter. 45% of the S&P was up. They were up to bat. And the market was just kind of like, meh. Microsoft, the market was like, forget about you. We don't like you. Goodbye. Google like literally smashed all expectations, 80% higher than any analysts were predicting, which is really impressive. YouTube, so one segment of Google, is on a revenue pace of more than $30 billion for all of 2021 versus Netflix expectations of $29.7 billion for all of 2021. YouTube is the same size as Netflix in terms of revenue. YouTube, do you hear me talking about you? Amazon beat too. Amazon did okay on the week, but not on the day, not on earnings day. An important thing to note about Amazon, everything on Amazon is an ad, which I think is kind of interesting. They're always advertising to you, and of course they're gonna make money on that. Like the market had almost priced in, I think, at a certain amount of growth for Amazon. Amazon almost has to create a small country in order to beat expectations probably. But I think a lot of the growth was already priced in. So Facebook did really well. Facebook did really, really well. Facebook is really interesting because they have tremendous leverage. He kind of scares me. So they're working a lot on VR. So virtual reality, AR, augmented reality, that grew 146%. They're not trying to be social media anymore. They're trying to be a computing platform. That's different. That's why they beat earnings. Also, Apple being so stingy has made Facebook's pricing power even better. Apple's like, give us 30%. Facebook's like, meh, just give us a little crumble. We already have all your data. Apple had earnings as well. They had tremendous sales growth. The Mac and the iPad are leading the way. I have a Mac now. Listen to this. I was 100% Android until January of this year. I got an iPhone because I was supposed to be on a Clubhouse meeting, and I was like, oh, I should probably get an iPhone so I can do that. So I got an iPhone, and then I got a Mac. I have AirPods. Like I'm in the ecosystem. I spent $70 on something because Apple won't make an HDMI connector in the Mac. It's called a dongle. A dongle. I contributed to Apple's massive cash pile. You're welcome. You're welcome. Warren Buffett's really happy about that. So we're able to hedge against the semiconductor woes that are plaguing a lot of other companies. With Ford got really beat up in the market because they were like, hey, we're going to have a $2.5 billion adverse effect from semiconductor problems. Apple is on course for about $400 billion in buybacks. They just authorized an additional $90 billion. And that's $400 billion, for context, is equal to the market cap of Walmart, Nvidia, Disney, Home Depot. Apple's big. Apple is big. Tesla had earnings on Monday, which feels like a year ago. They had pretty big news with their Bitcoin sale. Just a certain amount of Bitcoin. Elon told everybody about their Bitcoin purchase, which caused Bitcoin to rally, and then they sold off a portion of their Bitcoin, which led to quite the excellent quarter in their revenue. So a lot of people were a little bit unhappy about that. Elon has paper hands. He's also going on SNL soon to watch what the stock price does then. So that, I feel like that'll be the true memification. So somebody going on SNL, what is gonna happen to the stock? Haha. So Twitter also had earnings. So I'm on Twitter, obviously, but I wish Twitter would step up just a little bit. They could, and then they don't, and they should. That's my analysis on Twitter. They could and they should, but they don't. Market was expecting a certain amount of beating on the earnings. so a certain amount of growth in earnings, and if you didn't meet whatever that expectation was, you got beat up like Microsoft did, even though Microsoft had good earnings. It was a really interesting question. It's like almost like, well, why do we even have expectations anymore? Nobody ever meets them. Why do we have expectations? There's a quote, I can't remember it. Expectations, the only expectations you should have are getting your feelings hurt. Something like that. The only thing that's true is pain. That's what the market taught us this week. Pain. Anyway. So semiconductors, I wrote a really big piece on lumber and commodities, and that will be up soon actually. But think that the semiconductor shortage is going to be a really big problem. Capacity issues and supply chain issues beginning to show up in a lot of key production processes. One of the two. Crypto is back in action this week. JP Morgan has a Bitcoin fund now, so it's not gonna get banned. Nope, not with JP Morgan involved. Earlier, Jerome Powell spoke about Dogecoin briefly during his briefing this week, and everybody points to Dogecoin or Scamcoin or other coins as examples of market froth, or the volatility in GameStop and MVIS recently. Memes show up in traditional areas too, so we'll see bonds are starting to become a meme. Premium is at all-time lows, comparable to levels only seen during the Great Financial Crisis and the dot-com bubble. And I don't think that you can fairly compare this time in history to anything else, but it is interesting that the spreads have collapsed basically. And the market's barely compensating anybody for risk. They're just like, you're welcome. Buy our bonds. You're not getting paid. But the thing is, the risk is basically gone because the Fed's like, don't worry everybody, we'll step up. We'll save the day. Here for you. You. So the big question is, can companies still fail? And if they can't, are we going to have a ton of zombie companies wandering around with the Fed providing so much liquidity? And is the market complacent in letting these companies exist? Like, should there be some sort of like market pricing mechanism, like a stock price of sorts, that would push these companies out of the market? So yeah, investors still want these CCC bonds. People are still demanding the riskiest of bonds on the riskiest of balance sheets. People are searching for that yield, that little bit of yield. They're willing to take on significant quote-unquote risk in order to achieve that. This was an interesting chart. So it shows the stock market relative to nominal GDP, the bond market, and the money supply. And the stock market has sometimes been bigger than the bond market, but now it's bigger than everything. It's time where everything is big, financialized. Crypto is a really great example. The meme stocks are a really great example. I just don't think this sort of thing is changing anytime soon. There's so much money trying to find a home, and so next week there's a lot more data coming. Earnings are a little bit calmer. Market's probably going to take a little bit of a breather. I post daily market updates on TikTok if you'd like to hear me talk for about a minute every day. That's where I do that. And if you'd like, please subscribe. And if you liked this video, go on and give it a thumbs up if you'd like. Thanks for watching, and I'll be back next week. Bye.